Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's February 9th, and we'll jump right into it today. We got just a couple items here to note, and the first one is, of course, the weekly jobless claims. Last week we had 373 reporting for unemployment. We figured it would be within that same range to 370, and it came a little bit lower. So kind of good news right there, about 15,000 less from the previous reportings. Still, also magic number has been under 400,000 for a while. So also good news right there. So things are getting a little bit better in the job market. Even though we keep hearing, of course, a lot of people fell off and aren't reporting on those numbers. So we'll kind of wait and see. Maybe give it a few more months. We'll kind of wait and see here. Next item to note is wholesale inventory. So basically what this is for December's reportings, November basically was zero, and then basically for December went up 1%. So that's kind of good. Showed that people were kind of stocking up on the inventory side of things. So that was kind of good, as we saw. Obviously, manufacturing was up, so probably wholesale purchases, and then of course they go to resale, which goes oftentimes obviously to consumers. So we'll jump over to headline news. That's it for the economic news releases for today. Stock markets are up a little bit, not a lot of trade or anything, but a little bit. The euros kind of gained a little bit. There's reports that the Greek government kind of went in and they okayed the austerity measures, so that's kind of good news. So that way, there's no default when March comes around for uh, their bailouts from the IMF and European Community. Another item to note, there's an item here about banks and for states foreclosure agreements. So it looks like the banks, the big five, like Allied, Bank of America, Wells, Chase, and such, came to agreement with a lot of the state attorneys in regards to the robo signing and such, that we're dealing with the foreclosure and paying out billions of dollars in this. Now, I put good or bad primarily because I want your opinion. I'd love to hear from you folks, see what you guys think. Uh, this sounds great on the surface. It sounds wonderful that these guys are being punished for what they're doing. But the fact of the matter is, these guys really won't be absorbing that huge amount of money that they're going to be paying out, because it will just be brought back in to basically pass on to the consumer by additional fees. Maybe in the bank branches, they hit you, like they've talked about before, the debit card fees to having minimum accounts, hitting you maybe $10 a month for that. And when you have millions of customers, that adds up to be quite a bit. Also, on the mortgage side, they might just raise their interest rates a little bit, put additional fees into there. So there's ways around going about it that they really don't feel that pinch, so to speak. They'll still hit their earnings that they want to hit and just pass those off onto the consumer. So that's why, good or bad, I'd love to hear what you guys think about that. Even though it sounds like a punishment, but indirectly it's really not a punishment, because you got some pretty smart individuals here that can work around it. So love to hear what you guys think. Also, a poll shows that majority of Americans are sold on home ownership. Basically, it was saying that about three-quarters of the people out there are glad that they still have a home. That it was more, even though we had ups and downs these last 5 years, that home ownership was important to them. I could see that primarily because even those I see being in this business, people losing their homes, they want to get right back into it. They're asking questions. I got a BK, or I had a short sale, or I had a foreclosure last year. When can I buy again? So they're constantly asking. These are people that were in it and will be back into the market when they're eligible to go back in. So it is important to people. So those of you who have never had home ownership, I wish you, I hope you guys do have the opportunity, or take the opportunity to look at it and see if it makes sense for you. In many cases, it does, as rents basically are basically the equivalent, or maybe in some cases more expensive than home ownership. So there's a lot of programs out there that can help you. So I highly encourage you to take a look at it in your market. Every market's a little bit different, and I wish you well. Talk to a good mortgage planner, and they can definitely assist you in that capacity. Especially right now, where rents can easily go up, whereas if you get yourself a nice 30-year fix, your mortgage payments won't go up. You'll remain the same. So again, you can save yourself money in that case too. So let's jump over to the get out the soapbox here and jump over to the bond market and see where interest rates are moving. We're down today. Interest rates are a little bit aren't as good as yesterday's. As we could see, we started off the day about 12 basis points lower than where we left off yesterday, and right now we're about another 3 basis points lower. So it's so right now we're down below the 10-day moving average. We'll kind of wait and see. Tomorrow we got, I believe, consumer confidence that could be a market mover. As if you've followed me for a while, perception leads to reality. So people are feeling confident. It could help us out with the economy. If they're feeling down, we could easily slide into another recession. So, all right, folks, it's kind of long today. I apologize. You guys have a wonderful day. Subscribe if you guys are on the site and get your free updates. And I will see you tomorrow.